This is the Analysis in Chains with Nathan Williams and Neal Kieran.
Greetings, everybody. Welcome to Analysis in Chains. Happy Monday. Neal, how are you doing?
I'm doing good, Nathan. Life is good. I'm, on my last shirt after what's happened in the last few days with the prices.
You're not crying, standing on the edge of a building, ready to jump off, throw yourself into the abyss?
Oh, it's, I can't deny I thought about it a few times, but no, I'm not quite there yet, Nathan.
I know a lot of people that lost a lot of money the past week. It's been a bit of a bloodbath out there. Yeah.
Like in a way, it doesn't come as much of a surprise because when we had this huge drop in February, we had this like huge mini bull run, and everyone thought, okay, it's going straight back to 20K, and everyone was buying the dip, and it was very, very popular on Twitter. But it seems that momentum has just lost some ground, and people started to maybe feel a bit nervous. Oh, is it really going to go to 20K? And people just start selling off, and of course that just triggered a bloodbath. Now, there has been some FUD out there, some news that's made people nervous, but at the end of the day...
Well, the SEC had a whole thing, right?
Yeah.
What was that?
Yeah, so the SEC were saying that if you are an exchange in crypto, you have to be regulated. You cannot use the term exchange because it's misleading. People are under the impression that you're regulated and you're a safe place to do business. So naturally, that made people nervous. But the thing is that there are decentralized exchanges out there that are not based in the USA and shouldn't be under regulatory pressure, because how can you put regulation something that's decentralized? So it's very hard to know.
Shapeshift. How many different ways that there? Binance. How many?
Yeah, there's a lot.
It's crazy, and the idea that we knew that if anyone was going to try and regulate Bitcoin, it was going to be through the exchanges. We've known that for a while because there's no other way to do it. Right. But even so, the fact is decentralized exchanges are what people have been working on the past year and a half. Everyone knew it was going to come into the next generation is going to be these decentralized exchanges. So, I don't know if it's FUD or what's going on, but I don't think this is the end of the world.
Well, yeah, I completely agree. It's not the end of the world, but the thing is that if the price is not strong, that means this type of news can really spook people. If we think back to November and December, when all of these prominent people in the financial world were giving out about Bitcoin, saying this is bad, it's a Ponzi scheme, the price just kept going up because the hype was so strong and the belief was so strong. But we're going through this period of doubt now. And so when these type of pieces of news come along, it can really impact price in a big way. So it's really all about momentum and timing. And for me, I just shrugged my shoulders when the SEC regulation came out. And one of the things that they're really emphasizing on was altcoins, all these scam coins. They really want to clamp down on those. And to me, that was... that's one positive thing I got out of it, and I didn't think in any way Bitcoin was going to be impacted by anything that they said. But it just goes to show that the price momentum is not strong, and therefore we had the reaction that we received in the last week. And c'est la vie. It looks like we are really in a bear market, and how long it will go on for, we don't know. But it doesn't really come as a surprise to me.
It's so funny because, wasn't it just a bull market 3 weeks ago? The turnarounds happen so quickly. Like, I don't know. I think that any change in the market is just something you just got to sip your tea and you go, okay, well, if you don't like the weather, wait 5, days and see what turns it around, because there's really no predicting it with crypto. The majority of Bitcoin is held by whales. A lot of Ethereum is also held by whales. And whales don't move that much. They don't move a lot of volume around. And so when people get spooked, when the retail investors get spooked, it's going to cause a lot more shockwave in the market than it would anywhere else. And in the standard stock market. And so I'm just looking at this and saying, well, people have gotten spooked, and then they'll come back, and then again there won't be a lot of liquidity in the market because again a lot of the whales are holding the coins, and so the retail investors are really dictating the price right now, from my point of view.
Yeah, no, I completely agree, and a lot of what is happening reminds me of the financial crisis in 2007, 2008, and I remember when a lot of the bank shares were severely impacted and had plummeted to record low levels, and many people got excited. They're like, wow, this is dirt cheap. This is down 80%. This is a bargain. And naturally, everyone plowed in, bought all sorts of bank stock, thinking to go back up to its original price. And sure, in the short term, it jumped up maybe 50% and everyone was delighted, but then it plummeted really close to zero for a lot of these banks out there. And that was a typical bull trap. And I feel like that's what we really just saw. It was just a bull trap. There was overreaction possibly from the retail investors that caused it to plummet to $6,000. And then they all piled back in again and went up very, very quickly. And everyone thought, okay, the boom time is back again. But we're seeing it all play out, because at the end of the day, the hype we saw in December and January really has passed, and people are a lot more cautious about Bitcoin. But I think people need to focus on the bigger picture. Yeah, the price is going to be sensitive over the next while, but blockchain is becoming a lot more popular. People talk about blockchain more. People go to events more. The ecosystem, the community is a lot more durable, strong, well connected than it ever has been. So while people may get anxious about price, they have to realize that something really big is developing here, and the long-term bigger picture is very promising, and therefore price will be promising in the next few years.
One thing that always comes to my mind is something I remember Vitalik saying. I guess it would have been back in December when we reached peak hype, and something like 10 billion value got added to. Well, I don't remember what it was. Maybe it was IOTA. Maybe it was one of the coins. And he said, "Did that much value get created?" Or I'm sure that they've improved in the past 3 weeks, but did they improve $10 billion in market cap? And the answer is obviously no. That it's purely driven by hype. And what we're seeing now is sort of people trying to figure out where the intrinsic value lies. We know that there's a fundamental technology that has already and will continue to completely change the way that electronic transactions are done, that traceability is done, that value transfer is done. But the intrinsic value of it versus the hype and speculative value, it's hard to determine. No one knows what it is. And as people are speculating, you're going to see the prices go up and down, and the retail investors come in and leave. But the intrinsic value, that this changeless, immutable value, that's going to be sort of underlying it as a value that doesn't drop below a certain point. And I think the crypto market, going through the hype phase that it did, has really brought attention to all of these crypto projects. And that, even though we are currently in a down market this week, I think that the underlying value is more apparent to people now. more apparent to people who weren't aware of it before. And this gives a solid platform for new projects to come up, new things to be built, in the same way that the internet boom and bust laid a foundation of awareness and usage that allowed the internet giants to come up in the early 2000s.
Yeah, I'm glad you brought up the whole awareness point, because one of the graphs that's making the rounds out there is this Bitcoin Google trend graph that is very highly correlated between the price of Bitcoin in terms of its peaks and its valleys and troughs, and how many people are searching Bitcoin. And it's really dropped down to like this October low, and it looks like it's just going to continue dropping in terms of people's awareness or eager to learn more about Bitcoin. But going back to your awareness point, blockchain has not dropped as much. And this whole boom really has opened up people's eyes to what the blockchain is. Because too many people attach Bitcoin and blockchain together as if they're the only things out there. But it's such a rich world and is constantly developing. And there's always these new projects and people want to get involved to a certain degree. And so to me, I realized, this was like this huge awakening. Like I always had known about Bitcoin for years, but it was just Bitcoin. There was nothing really else out there to get excited. No other reference points. And then the more coins have been added, now people say this dilutes the value of crypto, dilutes the value of Bitcoin. But to me, this actually helps gain crypto value because you have rich communities out there developing very innovative products. And I feel that, you have this huge boom in awareness and innovation, and this can only be great in the long run. And as you know, when you use your internet.com example, it took a few years for things to pick up, but look, it dominates the world now today.
One thing to recall is that in terms of market cap, in terms of crypto value, Bitcoin was sitting at something like 90% of the total market cap of all crypto for a long time. And everything else, all the ICOs, all the individual coins, all of the Ethereum, everything was about 10% of it. And what this tells me is that when people came into crypto, all they knew was Bitcoin. And they saw a lot of people making money, and so they invested and they wanted to see the value go up. And a lot of people were fighting about Bitcoin. Will it fork? Should it fork? Should we SegWit 2x? Should we not? But all of this retail investor hype was around Bitcoin specifically. And the ICO market, the Ethereum market, it was much, much lower. And so in terms of this hot market crypto boom that we a few weeks ago were calling for the summer, I don't see it slowing down, even if the crypto market is low. Why? Because how do you invest in most crypto projects? In most ICOs, most token sales, you got to buy Ethereum. And then you trade Ethereum for whatever tokens. And then, you hope things go well with that project, and because you've given them your Ethereum, and then you've got tokens in the new project. But what we might see is a trend away from retail investors who have to convert their euros, their dollars, their rubles, whatever they've got, into Ethereum first, and then invest in these crypto projects in Ethereum. What we might see is a trend more toward people that made money or made projects, or the crypto whales before, who have Ethereum sitting around. Because the thing is, even if the US dollar price of Ethereum is half of what it was a month ago, the Ether to new token price is unchanged. And if they've got a bunch of Ethereum sitting around, it's not, it's just sitting there. So maybe it's time to invest it in another ICO. So I don't see this slowing down. I just see a trend moving towards private sales, with retail investors sort of slowing down.
Yeah, I think you made a very good point, because I'm on a lot of Telegram groups for various ICOs, and I just like to follow the messages, see what people say, see how anxious they are, given what's happening. And people are at their most excited when they're part of an ICO. So if you're outside of an ICO and you're just looking at Ethereum and Bitcoin and other prices, then you start to feel anxious. But when you get into the ICO and you're using these Ether, again, if you're forgetting about its fiat value, but you just think of, okay, I have this Ether or this crypto, and I'm going to exchange it for another. I'm going to invest in my crypto in another crypto. Yes, that whole world is very, very strong. It's very, very rich in terms of community, and we could have a quiet revolution of sorts over the summer. We could have more people involved, more people trading, and people making a lot of Ether based on their trades of ICOs, but because of their fiat to Ether value, it doesn't seem like people are getting rich, or the whole crypto world is becoming more valuable. And I think that's a very, very, very good point, and something that people need to be aware of is that just because there's not a lot of noise out there, it doesn't mean that blockchain has gone quiet. And I'm very, very sure that a lot of people involved in the crypto world are going to be even busier this summer than they've ever been in their whole lives.
Well, just from my own personal experience, as you know, Neal, I haven't gotten a lot of sleep recently because I'm planning for my own token sale, my own thing. And we're going through an equity round first, and then we're going to do our token sale. And because we're doing an equity round first, the equity investors, the traditional investors, are still in, right? They're still super excited. The crypto investors are also still in, but we've made a couple of them nervous because they have to convert crypto to Ether, to euros, right? And so they've lost a lot of money. And so they're trying to rerun their numbers and make sure it makes sense for them now. Whereas if we were doing just straight crypto to tokens, it'd probably be the other way around. The traditional investors might be like, let's just double check these prices. Whereas the crypto investors would be like, yeah, sure, no problem. Yeah. Because it's all about that conversion and who's taking on that change of currency risk. And let's be honest, there is a risk. There's always a risk, and with crypto, it's the single riskiest investment you can make when you're putting your money into it. And I think we've said this many times that you got to be careful because it's a volatile space. There is none more volatile right now. But it's fun.
but the thing is, Nathan, I'm sure there are a lot of VCs out there licking their lips because the hype and the prices we saw in recent times are a sign of what there is to come. Like if we think of, say, Amazon's price during the dot-com bubble, I think it went down 90%, but then a few years later it went back to that price. Or maybe 10 years later it went back to that price. So if you're an investor and you're a part of the dot-com bubble, you're thinking, okay, I can see into the future, and I'm just waiting. I'm biding my time to get the right price to get in. And they're the guys that have a lot more capital and can really help change the markets. And I'm sure that they're the ones who are going to really help the whole world take off again, because a lot of retail investors got burnt and they're like, you know what, I'm done. I'm done with crypto. I don't understand it enough. What's the point anymore? But we've been seeing this trend, Nathan, you and I, of a lot of VC, a lot of private equity getting into crypto. So there's companies not even having a token sale because they've reached their hard cap through private token sales instead of, say, going through the whole public crowd sailing business. So I wouldn't be surprised if that's what's going to be happening in the background a lot of the time. A lot of VC money really helping to promote and develop a lot of ICOs or a lot of, say, crypto companies out there. And so come, late in the year, people will be turning around and thinking, hey, where did this new company come from? They're really solid. They have an amazing team. I didn't hear about these guys. Well, why did I not get a chance to partake in an ICO? And I wouldn't be surprised if we start seeing that a lot in the future.
Yeah, well, the ones I've talked to, because I have talked to a number of VCs, they're sniffing around. The more traditional VCs are sniffing around like a pack of wolves. They want to, they're a little nervous, but they want to get into it. They don't want to miss out, but they got to do their due diligence because they're if they're more established, if they've been around a while, then they've got certain limits on what they can invest in, what they can't in their funds. But I talked with a couple that have already dived in to tokens. And some want to get involved with crypto projects by doing an equity investment into the crypto project. And that can work and that cannot work. I mean, it depends, right? So, I mean, with crypto projects, if you are buying equity, it can be that the equity is worth nothing because the value is in the tokens. If you're building something decentralized where there's no business model, but the tokens get used in the system and it's completely decentralized, like Ether or whatever, then there's no point in owning any equity. If, on the other hand, you've got a project where there is a business model, it's much safer to own the equity because if the company has to pivot at some point, then the tokens might be valueless. So, you gotta weigh these risks as a venture investor, and I think what they're waiting to see is sort of what's the best way of evaluating a new company and what is the best thing to invest in, just because they don't have the experience yet. But we are seeing some crypto funds that are solely based around crypto starting up, and so this is the new thing now. And the question is, are the more traditional VCs going to be able to keep up with these newer funds that are specialized in crypto or not?
Yeah, I think what's going to be central is determining how to value a token. I'm sure there are all sorts of ways of determining its intrinsic value, going back to your earlier point at the start of the podcast. And I think when these methodologies or techniques start to emerge, that's when things become a lot more robust, because we have to remember a lot of VCs are used to, calculating finances the way finances and accounting and GAAP principles are applied in the real fiat world. So therefore it makes it much easier to weigh risk and understand how much capital they should allocate to a project. But with crypto, you could say you have a 99% risk all of the time because something you invest in could go to zero. Mm-hmm. And if that's the case, that's very, very difficult. That's very difficult to know how much you should allocate. And so I will be very excited to see how this space evolves and how, people start to discuss publicly the type of techniques they're using to sort of determine a means to value a project. And the one guy that's out there that I see that's very open and public is Tom Lee from Fundstat, who comes up with his price predictions. He's a former Wall Street analyst, and he's still all about 20K Bitcoin this summer. And a lot of us are thinking, where do you come up with these numbers? And but he seems to have a way. And if he's right this summer, for sure, we're going to be hearing a lot more about his analysis techniques and how he goes about valuing crypto.
Well, I tell you something right now, Neil. I am actually calling 25K Bitcoin by August.
Why?
Do you know why? Because if I'm wrong, no one will remember. And if I'm right, I will get bragging rights till the end of time. That's my high-tech analysis number technique. You watch 25K by August.
Yeah,
there we go. But I say that in jest, though, honestly. But honestly, Neil, honestly, I am wondering sometimes about people that come out with these predictions if they're not doing it in the exact same way. Like where do people get the numbers from? And even if they have a technique, if they're wrong, do people remember? If they're right, people will talk about them as the people who predicted it, right? With whatever technique, whether it be accurate or not,
Well,
I don't know. I feel like I could just say, yeah, well, I mean, of course I got 25K because obviously with the dynamic price trends, we see a logarithmic scale going up and, insert fancy words. And
well, I think that's why Tom Lee is so interesting to me, and I quote him a lot, is because he is out there on Bloomberg and CNBC, and he really puts himself out there, and he seems to be now the guy who is putting his whole reputation on his predictions, and so far he's been right. Now, a lot of people do say crazy numbers, and they have been right too, but they haven't been able to back it up with any sort of means of determining that number. So Tom Lee has publicized two means so far of coming up with those numbers. One is his analysis is dependent on Metcalfe's law. Metcalfe's law helps evaluate the size of a network. So he is saying, well, because I like Bitcoin, and I tell you and another friend about it, and then you tell another two friends about it, you have this exponential growth pattern. He says that's central to his analysis, which kind of makes sense when you look at how much Bitcoin has grown and the amount of people that are now involved in it. And another metric he uses is called the Bitcoin Misery Index. And the Bitcoin Misery Index, yeah, I know, it sounds kind of funny.
I love it.
So what he has shown, and I mentioned this in Neal's news, the previous podcast that we had, in the Bitcoin Misery Index, he says that whenever it goes below 27, there is usually a very strong bull run. And right now, I believe the Misery Index is at 18.8. And I think the last time people felt this much pain, I believe, was in 2014. I think that's the last time. And they're therefore suggesting, like, okay, the signs are there that we're going to have this crazy intense bull run now, because according to his Bitcoin Misery Index. So again, we're going to see if he's right, and it really does make people think of it makes them realize they have to think of valuation in such a different way and use network effects in their calculations for valuations.
No, I mean, it makes sense, and it's funny because I feel like you and I have reversed positions on this since 3 months ago, when I was arguing that network effects and the number of new people coming in really brought legitimacy to the price. And I think you were more skeptical back in December. And here we are, and I'm feeling a bit more, I'm not sure, cautious maybe is the word. I'm not skeptical. I do think that there is a very high chance that he's right. I'm wondering if his prominence as a well-respected leader that is putting himself and his reputation on the line in places like Bloomberg is contributing as well. It's almost like a self-fulfilling prophecy. Doesn't make it, less right. It's just, it is a factor when you've got the experts speaking about a rally that it does generate more interest.
I am still skeptical about Bitcoin, but I'm less skeptical about crypto as a whole. So the reason I say,
no, absolutely, we're in agreement
and the
there.
reason I'm skeptical on Bitcoin is that I get there is a movement towards valuing digital assets. I see this a lot more with people under the age of 25. And I think this is very prominent in the gaming industry, where people trade skins on games for very, very high valuations. And, when we look at CryptoKitties and I think Etherbots, this is a bit of a movement towards people having a digital asset and really, holding it and believing in it. Now, Bitcoin, can Bitcoin be gold 2.0? There are many reasons to suggest it can, but there are also many reasons to say why it cannot. And when I look at the transactions these days, it really has dropped low. I think it's dropped down to, the amount of transactions it was experiencing 2 years ago. So it makes it hard for me to believe that it can really be this huge, all-powerful cryptocurrency that a lot of people talk about. But I'm a lot more optimistic about Ethereum because, again, if I look at their transactions, it has dropped, but not that much. And the community is so strong. It's very easy. It's more tangible to understand how strong the community is, because you look at all the ICOs. Oh, there's more ICOs this month. Therefore, Ethereum will be needed more. And so that is much easier to understand and determine, okay, well, Ether will grow in value over time. But with Bitcoin, the whole idea of people buying Bitcoin and holding on to it like gold, it still is like, oh, will this really matter? Because I don't own gold. I don't own real gold. I never had any interest in owning real gold. So why would I want to own digital gold? So that's where I struggle to really get on board Bitcoin in the long run. But for me these days, Bitcoin really is a health indicator in terms of how passionate people are about blockchain today.
Well, I mean, I think it's going to be that way over the summer as well. I still think that no matter which way the wind blows, Bitcoin is going to be the number one way that newcomers access crypto, any crypto. Ethereum will remain number two. And that, you can't really downplay their importance. And so sort of the value of everything is rightly or wrongly tied to the value of Bitcoin, and will be for the next foreseeable future. I mean, for the next while anyway, till something different comes along. And
I agree. I completely agree. It still is the gateway into crypto world. And as long as that's the case, it really is going to be number one.
I don't know if we had a point to this whole episode, Neil. We were all over the place, but that's fine. I mean, I think what we're just like, our conversation just reflects the general confusion in the market. It's like things are up, things are down. We're trying to make sense of it. And I think that's okay. Let's, grab our coffees, hold on, and, keep the white knuckles and wait for the crypto market to pull back up. And I, for one, would really like the crypto market to pull back up because, everyone sort of benefits from that. And at the same time, if it takes an extended bear market to sort of wipe out the scams and to get some really good projects and really good knowledge of how to evaluate projects in there, then maybe it's for the best for the industry.
I agree.
Anyway.
Yeah. I thought you were gonna wrap up, so I just left some space for you to talk. But okay, I completely agree, and now you can wrap up, Nathan.
All right, let's wrap this up here. We've got an event coming up on the 29th of March. You can visit our webpage. We've had so much demand for the past few Blockchain Unpacked events in Berlin that we actually have to have tickets this time. So you'll need an Eventbrite ticket, and the tickets are €5. We just basically need to make sure that there's enough space for everybody to come. Although maybe with the market down, maybe no one will want to. I don't know. But we do have an amazing special guest. It's Sam Williams, no relation. He is the founder of Arweave. They've got a way of using blockchain-like technology to make sure data is eternally available in a blockchain-like format. It's very neat. Very good guy. You should totally come out and visit the event. In addition, we've got this event that we're partnering up with in Amsterdam called Zero In on Tech, and we'll have a link to that as well. Zero In on Tech is going to be. Do you remember the dates, Neil? I don't have them written down in front of me. I think it's early April.
Yeah,
Anyway, we've got discount codes. And you should totally visit check in the links. We'll have the discount codes and the dates and everything, and it would be very cool to go to that. A lot of good speakers there, and it's nice that we've got these little partners there.
Yeah, it's on.
Anything else, Neil?
I was going to say that the Zero In Tech conference is on April 19th for those who are interested. And as you said, check out the links in the podcast for some discount codes.
Cool, man. Neil News, how did it go? I didn't have a chance to listen to it.
Of course, it was good, Nathan. I don't know.
I'm such a bad co-host. I'm your worst friend. Everyone else, go listen to Neal.
So we had our first Neal news, and it was only put up yesterday. So we'll see. Like, if you think it was terrible or you liked it, please write in, let us know. And again, it's really to help people stay on top of the latest news, because there's so much going out there. I'm really just helping you to filter through it and know what's the most relevant news. And I also discussed an interesting project of the week that you should check out. I've known if it's going to be a good investment or not, but it's just want to bring awareness to really cool projects out there in the crypto world.
If you listen to our interview last week, some people wrote me and let me know that the sound quality was off. I had posted the wrong file by accident. My sincerest apologies. I fixed the file and I uploaded the correct one. So if you listened to the StormX interview with, the StormX interview, it was an excellent interview, but it was really bad production at first. So go and take a second listen if you found it unlistenable at the time. So that is all for now. What do you have going on this week?
This week, I'm have to do my research for Neal's news. I came across another cool project I cannot wait to share with our listeners. And I've been playing around with my Ledger wallet, which has been cool. If you have a Ledger wallet, I'd highly recommend using it through my Ether wallet. I've been reading a lot of issues that people have been having with my Ether wallet and various scams and losing their coins. So yeah, I would encourage people to use hardware wallets to back up their goods, and I've just been playing around with mine lately, and it's been fun.
Fun. I got to get myself a hardware wallet. I don't have one yet. That's on my to-do list. Cool beans, everybody. Have a great week. We'll talk to you later. We've got all sorts of good stuff coming up. Don't give up in the market. Things are going to turn around. And until next time, keep on hashing.